Hello, everyone. Looking back at the month of August, strong month in the market with all three indexes reporting positive returns for the month. The S&P 500 notched its fourth consecutive monthly gain and set multiple fresh all-time highs during that period. So very strong month when it comes to the S&P 500. The Nasdaq also positive for the month, notched its fifth straight month of positive returns. When we look at the month, the Dow led. The Dow was up over 3% for the month of August. The Nasdaq was up a little over 1.5%, and the S&P 500 was up nearly 2% for the month. When we look at year-to-date returns, so January 1 through the end of August, the Dow's up just over 7%, the Nasdaq's up just over 11%, and the S&P 500 is up nearly 10% for the year. Looking at the month of August, the month began with some macro growth concerns. It was sparked by some weaker than expected July non-farm payroll report numbers, as well as the non-farm payroll report numbers getting revised lower for both the months of May and June. When we look at the July CPI inflation numbers, we saw some CPI services re-acceleration when it comes to inflation perspective, but the goods inflation was cooler than feared. So that was a positive for the month. The headline number came out at 2.7% year over year growth when it comes to that CPI inflation report number. The core PCE, the Fed's preferred inflation metric, came in line with consensus, and that headline number came out at 2.6% for the report that was released in August. Given these economic reports and the data that was released this month, and as well as Chairman Powell's speech in Jackson Hole in August, we think there's a high probability that they will cut rates for the first time in September. So we do think that a rate cut is on the table and will probably occur in the month of September. Earnings season continued in the month of August as Q2, or second quarter earnings, continued to be reported. Earnings per share growth for S&P 500 companies came in at nearly 12% on a year-over-year basis, which is much higher than the 4.8% expected growth rate. So when we look at the percentage of companies beating their earnings estimates, it's been higher than the long-term averages have historically been. But when we look at the magnitude of those beats, it's been lower than the long-term or 5-year averages. So a little bit of a mixed report that earnings have come out and continue to be strong, but the beats haven't been quite as high as they have been in years past. A few things to think about as we continue to look forward to the month of September and then throughout the remainder of this year. The consumer has remained healthy, but there are signs of some stress showing, and the tariff impacts may continue to intensify throughout the remainder of the year. Historically, September has been the weakest month in the market in the calendar year, and so it wouldn't surprise us at all to see some digestion, maybe even a pullback in the market during the month of September due to a couple factors. Both the run-up that we've had really since the middle of April, the market has gone up very consistently, as we were talking about when it comes to the Nasdaq being up for 5 months straight, the S&P being up for 4 months straight. We are due a period of some consolidation, maybe even a little bit of a pullback just to digest some of those gains. And then you factor in some seasonality where the market has historically been softer during this period. So we wouldn't be surprised at all to see the market take or catch its breath, so to speak, in the month of September. That being said, look forward to having a wonderful month of September. Hope you all have a great month of September as well. See you next month.